Hey everyone, Couch Investor here with another video for you today. In today's video, I'm going to go over the earnings report regarding Beyond Meat and Invitae. I'm going to go over the charts, the numbers. I'm not going to go in depth in the earnings report. If you want to go and look at the numbers and everything, links will be down in the description below. There are a couple of news articles that are worthy to mention regarding Beyond Meat. As for Invitae, I didn't find anything that was newsworthy, so we're gonna wait for next month's video. And before I get into the video, if you want me to cover Disney's earnings report, let me know down in the comments below, because there are a couple of interesting things I think some of you might want to hear. And if you like this channel, maybe subscribe. And if you like this video, maybe hit that thumbs up button, as it really helps me out grow the channel. So without further ado, let's dive into this. All right, so for some of you that are new here, I already covered Invitae and Beyond Meat. If you want to go and look at those videos, they're going to pop up in the top right corner. So before I get into the articles and the earnings report, just want to say that both stocks are down 7 to 10% right now because, well, one met the expectations, but that was not enough for investors. And the other, well, the other might have had maybe better numbers, but still we're in a pandemic period, which means that some numbers will never be good enough for some investors, but that's to expect it. When you invest in growth company, you expect growth, and sometimes meeting expectations is not enough. That's why the prices of some of these stocks are high, because we have high expectations, so we expect better earnings report. So let's dive into Beyond Meat first and then Invitae. All right, so first up for Beyond Meat, we see that they're heading to Sam's Club and BJ's Wholesales, which is great news. We can see here Beyond Burgers will be sold at Walmart's warehouse chains Sam's Club and BJ's Wholesale Club Holdings. Beyond Meat actually began selling at Costco already last summer. The news comes just days after rival plant-based burger maker Impossible Foods began rolling out its Impossible Burger in nearly 2,100 Walmart supercenters and neighborhood markets nationwide. But that's not the only good news we have for Beyond Meat. We can see that they also went to Wawa and they started selling their Beyond Meat breakfast sandwiches there. Some of you might not know, but there are super big convenience store chains in the United States. You can see here that the plant-based sizzly breakfast sandwich is made with Beyond breakfast sausage. The sandwich is now available in all of Wawa's 650 stores in Pennsylvania, New Jersey, Delaware, Maryland, Virginia, and Washington, D.C. It will also be available in all 220 stores in Florida starting August 10th, so that beginning of next week. Now, a bit of bad news, let's say. Beyond Meat stock drops nearly 8% as earnings disappoint ravenous investors, but it's actually not that bad. Beyond Meat's US grocery sales nearly triple, offsetting restaurant losses. I'm going to talk about that a bit later, but let's look at a couple of numbers right here. So we can see here's what the company reported for the quarter ending June 27th compared with what Wall Street was expecting based on a survey analyst. All right, so net losses per share 16 cents, revenue of $113.3 million. So Beyond reported a second quarter net loss of $10.2 million or 16 cents per share, wider than its net loss of $9.4 million or 24 cents per share a year earlier, excluding of costs related to COVID-19 and the early extinguishment of debt. The company lost 2 cents per share, which is exactly what was expected. So they actually met the expectations, but that's not enough for the investors. The company spent $5.9 million repackaging its products to be sold at grocery stores rather than a temporary shuttered restaurants. And we can see here that net sales rose 69% to $113.3 million, like we said before, topping expectations of $99.7 million and crossing $100 million in quarterly revenue for the first time. So that's a very positive sign. Its US grocery sales soared 194.9%. In the last 2 weeks of the quarter, Beyond began selling value packs of its meat-free burgers at Walmart, Target, and other retailers, like we've seen just before, with pricing that was more competitive with traditional beef burgers. Now he addresses the pricing issue. You will see us continue to push pricing. We believe that through the continuing maturity of our supply chain, particularly around the protein cost. A lot more protein supplies are coming in the market, as well as the own growth of our own operations in the US and globally. We're going to talk about that in a bit. So, and this is why actually the stock went down, besides the fact that it only met expectations and not beat the expectations. While Beyond's quarterly grocery sales surged, its US food service sales, which include restaurants and university, plunged 60.7% during the quarter due to the virus. Obviously, that makes sense since most restaurants and universities were closed during those months. They could not have made any sales, but like we've seen before, they have used that opportunity. Well, it cost them $5.9 million to repackage all that food and be selling those in grocery shops. Now, outside of the United States, Beyond saw a similar trend play out in grocery and food service division. Globally, grocery typically accounts for roughly half of its sales, but the ratio shifted to 88% in the second quarter after Beyond shifted production away from food service. So they're very flexible, and it's very good to see that they adapt quickly to any situation. If you look at some of the trends, that was the right thing to do because the consumer continues to look for our products, irrespective of whether they're shopping in food service or in retail, Brown said, as CEO. We had a household penetration rate that increased 40% between January and June. Another half of Beyond's customers are now repeat buyers, so that's very good even after everything reopens, restaurant chains and university. Now, international sales made up only about 15% of Beyond's quarterly revenue, but the company is expanding its footprint. Like I mentioned in my last video, it launched in mainland China through a partnership with Starbucks. In April, also a partnership with Alibaba, and has since entered grocery stores and more restaurant chains there. In July, Beyond launched in Brazil. Same thing, I mentioned that in my last video. So they're slowly but surely starting to have a footprint outside of the US, in South America and in Asia, and at the end of the year they will start in Europe as well. Right, so let's look at Beyond's chart right here. Since my last video, the stock held the support line I drew right here. It actually did the opposite. It went first down, then up. As of today, the market opened at $130. It was previously closing at $142, so it was down 8%, 9% or so, but now we're at $133, which is around about 6%. I believe we are going to stay at those prices for the next couple of days and then make our way back up to $140 or so, because the numbers weren't that bad at all. It just had maybe a slight overreaction from the market. So I still believe the stock will go up and break this $160 mark in the near future, especially I'm sure that it will happen this year. All right, so for Invitae, same thing. Shares of Invitae fell 9.39% in aftermarket trading. Now we're pre-market. I think the stock is just under $30 right now, but we're going to do a stock chart analysis when the market opens, so we get a live price action. But let's see here, earnings per share fell 48.08% over the past year to 0.77 cents, which missed the estimate of 70 cents, but revenue of $46 million approximately declined by 13.62% over the same period last year, which makes sense, but it beat the estimate of $39.6 million. There will be no guidance for this year as the situation is still not very clear, but they are pleased to have accessioned more than 120,000 samples in the second quarter of 2020. Despite the impact of COVID, we saw an 8% growth in volume, not a lot, but still 8% growth over the previous year's second quarter, so even more growth than last year where everything was good and gloomy. Previously, we noted overall volumes were down approximately 50% when the pandemic first hit in mid-March, and into April. From these lows, we have seen volumes recover in each month of the quarter and through July across all clinical areas. Overall, we are down just slightly from our pre-COVID levels by the end of the second quarter, and July accessions and billable volumes continue to trend to recovery. However, we express some caution as hotspots and regional shutdowns continue, but it's good to see that they are going back to pre-COVID volumes and levels. Now, a bit about revenue. We generated $46.2 million of revenue this quarter compared to $53 $28.5 million in the second quarter of 2019. Still a nice number considering everything they've gone through. A decrease in revenue was primarily due to obviously the outbreak, unbillable volumes, and mixed shifts. The last thing I want to mention is actually the acquisition and their cash positions right now. So we continue to invest in our business with multiple acquisitions announced this quarter. Announced, I think it was Archer DX and a couple of others, but moderated our operating spends. Now we can look at the numbers right here. So in terms of cash outflows, we closed the acquisition of GeneLex and UScript, which included the use of $25.4 million in cash. Net of the quarterly cash burn, we ended the quarter with a strong cash position of $428.5 million. Now, the acquisition of Archer DX is expected to close in the fourth quarter, and we have committed $325 million in cash to close the deal. Now, I think they've raised over $173 million in funds and via secondary offering that closed in April to have more liquidity just in case they need that for the end of the year or so in any unexpected events. Right, so as for Invitae, my last video was I think a month or so ago, so we've seen solid growth in the stock all the way to $35. But obviously in the last couple of days, weeks actually, we've gone down and we've gone to the support line that was held perfectly, bounced off it. And as of today, obviously the stock after the earnings went down. Same thing, I think almost 10% or so, but we're back up almost to $32. We're actually right now at $32. So the market is slowly but surely making sense of what just happened. And I believe same thing as with Beyond Meat. I believe the stock will linger around these prices right here, and then it won't take long before we go back to these heights right here at $35, which is a resistance right now, but I think we should be breaking it in the near future as well. Right, so to conclude, I think as for investor point of view, I think it's a safer bet on Beyond Meat right now, as the numbers are way better than for me than expected. Yes, sales in restaurants and universities and whatever are down, but that's normal since everything was closed for a couple of months. What is promising to see is that their presence in the international market and in supermarkets is growing, and prices will come down sooner rather than later. So as for investor point of view, I would gladly put more money in Beyond Meat before I put any more money in Invitae. That does not mean I'm not bullish for the long term in Invitae. That just means that seeing the quarterly earnings, as now the market we're in, Beyond Meat is a safer bet for me. But Invitae continues to grow and acquire new companies, which is very good and very aggressive method to do so. So it will probably pay off in the longer term, but as of now, I prefer Beyond Meat to Invitae. And that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed yet, maybe now is the time to hit that subscribe button. If you want me to cover Disney's earnings report, leave it down in the comments below, and stay tuned for tomorrow's Squares video. As always guys, take care, stay safe, and see you all in the next video. Bye bye.